Welcome to another episode of the ElysianNxt podcast. I'm Chris, the CEO and founder of ElysianNxt. Today we're in the warm city of Brussels, and I'm here together with Matthias Coessens, co-founder and responsible for the European operations.
Thanks, Chris. Thanks for joining us. It's been a while since I've been on a podcast, but we thought, okay, let's wait for some good Belgian weather to bring you over, and happy to be here with you today.
Appreciate that. Today we're going to discuss about the fascinating topic of IFRS 9, and although that might be daunting to start on IFRS 9 project, but it actually cannot be seen as so difficult because we have two fine gentlemen who will prove that the IFRS 9 journey is actually smooth if you choose the right product. So I'm here today with Jim, CFO, and Charles, Financial Director of Creditspring. Creditspring is a UK-born financial institution, which is very much different from other financial institutions. They have grown through an enormous growth over the last couple of years. So it will be fascinating to hear, what is Creditspring doing and what is all the journey about. Welcome to the studio, Jim and Charles.
Thanks for having us, guys. Chris, Mac. We are delighted to be on your podcast. Podcasts are the leading new media, sports, history, you name it. So to have the opportunity to be on one about IFRS 9, it's literally a dream come true. What a time to be alive. What a time to be in Brussels.
It's good to hear. Now, can you tell me a little bit more about how different Creditspring is compared to all the financial institutions?
Sure. At the heart of it, we're a retail lender, unsecured personal loans. That's not a new thing. That's been around for hundreds, thousands of years. We do like to think that we're doing things differently. We know we are doing things differently, and we think that we're doing very important things for the consumer and for the market. Unsecured lending, it's got a bit of a contaminated name for good reason. There's been some horror stories out there, and we are very firmly trying to do things differently. At the core of the way we do things is the subscription. We describe ourselves as subscription finance. Another way of describing that would be to say fixed fee lending. So essentially our customers, who we call members, they pay a monthly fee between between £8 and £26, in exchange for which they get the opportunity to have up to 2 loans a year, 2 6-month installment loans, which they can repay in monthly installments. The fixed fee nature of it means that customers will never pay more than 12 monthly fees, no late fees, no penalty interest, no court fees, admin fees, fees for getting a letter to say you're late. Never pay, so to take our core product, if you borrow £600 over a year, you'll pay back never more than £720. And that transparency, simplicity, that's hugely valuable to the customer. That's reflected in the feedback we get. And, fixed fee lending is at the core of it. And by removing the interest rate, we've done what we think are two very important, unique, not quite unique, but very distinguishing features. Firstly, customers cannot get into persistent debt. If you borrow £600 and the maximum you can repay is £720, you know your max risk, your max loss, max cost rather, and that's hugely valuable to people. We've all heard of the kind of horror stories of famously usury companies where a €500 loan turns into 5,000 and leads to real problems. All manner of unpleasant things can come from that. So simplicity, transparency, certainty as to the size of the cost, very valuable to the customer. The other thing it does is it puts the onus back on us to get the underwriting decision right first time. If we get it wrong, we don't get a second bite at the apple. We can't say, well, on those customers, we add on a delinquency fee, we add on a penalty, a premium, an extra cost to try and recoup that. So simplicity for the customer and discipline for the lender are at the core of the way we do things.
Wow, that's fascinating. Yeah. And how many members do you have currently?
We currently have around 340,000 members with the gross loan book is just under 100 million sterling, and lifetime to date, we've lent 1.6 million loans.
Oh,
yeah.
That's an impressive growth.
Yep.
Yeah. How long does Creditspring exist?
The company was formed in 2017 by Neil Cadigateur. I joined start of 2020. Trading commenced lending Q4 of 2018. When Charles and I joined, there was around 10,000 members, and there's now, say, close to 350,000.
Wow.
So quite a growth in the sort of last 4 or 5 years.
Indeed. And everybody's going to say growth is very impressive, but growth comes with certain challenges. Can you tell us a little bit more about, what challenges you are facing with that enormous growth?
Yeah, growth is, for any kind of early stage company, growth is pivotable. It's almost a sort of fetish. Are we growing quickly enough? How do we ramp up the growth? There's the initial period of just being small and wanting to have visibility. The kind of you're having to buy market share. Number of customers is almost more important than your underlying performance. And month after month, you're just watching deficits build up, the kind of ski jump where you really have to commit to it, but it's quite a nerve-wracking process. And you guys, running a growing business in Asia will be very familiar with that. As a lender, there's a kind of tightrope of growth, which is credit quality. Almost any lender can grow if they relax their acceptance criteria, but that will get you short-term growth, but it will obviously bring other problems, very quickly if you do that in an undisciplined fashion. So it's about growing whilst maintaining your credit quality, and that, as we've trained our scorecards, as we've developed our underwriting and our collection strategies, we've, as I say, we've lent £650 million lifetime. Probably 2/3 of that in the last 18 months. And we've seen loss rates come down from well north of 10% of credit advance to inside 4%. So getting bigger whilst getting better at lending, that we're very proud of that. That's good for us, obviously, and that's good for that's good for customer outcomes.
Yeah. So you can sustain a profitable growth going further. Yeah. So growth come also with in the business of finance with regulatory challenges.
Indeed. As you start to grow, you have to think about larger stakeholders, and they expect to see credit reported in a standardized way as regards credit losses and as regards revenue recognition. So that brings us, we can neatly to the topic of IFRS 9, at which point I'll hand over to Creditspring's finance director, Charles McCulloch.
Yeah, I guess so. Impairment was a focus from the outset for us. Raising senior debt, a debt facility, if you can't measure credit risk, then you may as well shut up shop and go home. All of that was done in Excel models. One thing about growing is you don't really think about it till I was writing this script. But quite quickly, I think within a year of joining, with a lot of data sets were outgrowing Excel. So that was kind of the first challenge, learning new skills and how to adapt those models to larger data sets. And then longer term, we got more into the technical challenges of IFRS 9.
Yeah. So
Was there a specific point, Charles and Jim, when you said, okay, we cannot longer use this heavily reliance on Excel from a governance point of view, from a pure calculation point of view? Was there a point where you said, okay, we have to do something about it? Was it maybe another external factor that eventually drove you to think of them? Yeah.
Audit,
yeah.
Statutory reporting and audit requirements are kind of they govern a lot of your reporting infrastructure. We could have muddled through with Excel for LLP, for EIR, or even for ECL. It was becoming clunky. Every time the auditors would speak to Charles about wanting a different sensitivity or LGD run a different way, he's thinking, well, that's X number of weeks to do that sort of exercise.
And going all the way back up to source data and almost starting again,
And so I would say LLP became about it being cumbersome to do, not impossible.
Yeah.
And actually, it's quite reassuring. When somebody like me can run a pivot table and then see the outcomes, I find that quite reassuring rather than black box. EIR, I think it's just computational complication, made that very soon limited. We were doing a cohort approach on an engine that Charles had constructed out of Excel using macros to extract data. But that was clunky to run in the first place and had limited functionality ultimately.
And I think our approach to IFRS 9, now we've implemented Elysian's quite holistic, whereas before it was a lot of individual components and the links between them weren't captured, particularly the impact of measurement EIR calculations on your ECL calculations, your stage assessment. And that's where the real pain points were for us.
Let's perhaps go back to that point when you said, okay, we want to step away from the Excel-based approach. We want to look at solutions, at vendors in the market. We're very happy, obviously, that you landed with IFRS 9.NXT, our module to compute the EIRs and the ECLs. But what made you eventually decide? What were the criteria for you to decide we go for this or that vendor?
Functionality. Will it actually do what you're expecting it to do? Will it provide the outputs you're looking for? Cost in terms of, is it, you're a growing business. It has to be defendable ROI. It shouldn't make your colleagues, startled. And that the team looks committed to delivering on the project. And that they have, a willingness to actually illustrate the offering to you rather than say, well, sign up and we'll show it to you.
Yeah. So you're mentioning delivering the goodies. Choosing a product is one thing, but actually the implementation is about people, processes. Can you tell me a little bit more about how the implementation process went?
For all of us on the Creditspring side, it was the first time doing a project like this at all. So having an experienced team come in, neat with Jai on the ground, was massively helpful, because for things like a UAT script, we'd never even seen one before. So getting suggestions there and then being able to think, oh, there's also sort of this thing we can add to it was a massive help.
You mentioned Nida and Jai. As you know, ElysianNxt is a Belgium Thai company. So you had the experience of working together with some of our Thai colleagues, Jai and Nida. Were there any cultural differences? Could they get used to the UK culture of doing things?
Obviously, they were very keen to get used to trying out different beers in different pubs, trying out different restaurants.
Blending in?
We did fish and chips one lunch. Yeah. That was a good excuse.
Although I heard from Nida that you're a great fan from Chinese food.
Inevitably, I took them to Yaocha because I take everybody there eventually. But yeah, of course, we had a number of different nationalities on the team, but united by a common passion for IFRS 9. And it is, it's an esoteric area, and it's super valuable when you find people who are actually knowledgeable about not only the standard, but the implementation. So yeah, we had all through the project, we were able to, Charles is very knowledgeable about the standard, knowledgeable about what Deloitte are expecting, but in actually re-engineering our data, how would we extract our data? How would it fit into your machine? What would come out? Yeah, they were very good at because obviously in the pitching phase, every vendor is telling you, our product can handle any product. Our product is, as I was kind of alluding to, it is very straightforward and simple for the customer. That fixed fee aspect. It's fiendishly complicated from an EIR perspective, because it, does it even qualify for disclosure under amortized credit? Does it meet the SPPI tests, etc.? That's a sort of almost metaphysical debate that we had to pay money to people to entertain us around that debate, and then take their outputs to slightly larger audit firms and say, does this work for you? And they, oh, well, maybe. So we had a whole meandering journey around, is it amortized cost or is it fair value through P&L. And then when somebody eventually turns around and fortunately says, yeah, it probably is SPPI, it probably is amortized costs, you then have to think, well, okay, how do I actually bring that to life? We had a kind of, then, as I say, cost was a factor and complications a factor. We went off the shelf first with, are we allowed to swear on this podcast? We went off the shelf with Whistlebrook, which is a product used mainly by UK building societies, which are like US savings and S&L companies. And essentially that product is designed to let companies say, here's the EIR impact, and look, it's not much different from straight line. Can we just do straight line? Yes. Off they go.
There's a good point there, because that's brilliant where the fee charging mechanism is interest, but in our case it's not, and the fee's completely independent of the loan. So I think that's why that probably didn't work perfectly for us.
And they were happy to make their product, make our fees fit into their architecture. Yeah. But ultimately it was, as they were openly saying, it's an off-the-shelf package. It's a package. We'll help you squeeze your data into it, but we're not going to retailer it. That became very quick. So that worked at a cohort level. It could never work at a contract or loan level. Yeah. And just what we could do with it, it made us, and specifically Charles, think more about our data and how we would have to, what would we really have to do to have a contract level EIR engine to model LLP at a contract level. So it was, if you like, it was a good catalyst.
It was a good data organizing exercise, because thinking about how you analyze cash flows and IRR was really useful going into debt provider discussions, especially when there's no template off the shelf for analyzing subscription finance. I think it did lead to us being a little bit stuck in our ways and coming back to the implementation team. Jai and Nida came to us with solutions for how we could model these cash flows that we'd never really considered before.
Yeah. That's good. And it needed an iterative and trial and error approach, because we certainly didn't have it in our pockets to just say, well, there it is, now run along and get some clever guy in Bangkok to code it up. It was clunky. And I mean, there's a standard journey for our product. A guy signs up, or a girl, let's be clear about that, signs up and takes a loan within 14 days, repays the loan, takes the second loan. But around that, there's probably up to 20 odd tail cases, which individually are not significant, but collectively, there's probably a standard route for 70% of the customers, and then 30% of the customers will do something different from sign up and take 2 loans and repay them. So a number of edge cases that we had to go through and actually model out, and each one needed modeled in a disciplined manner to give sensible results. Otherwise, you're just left with the hope that, well, in aggregate is probably not material, which isn't really that reassuring.
Well, certainly you have to defend the results of the auditors or the regulators. And when you can trace it all back to the granular data, that's of course a very strong argument. Now, going back to the implementation team. There's a very famous picture of you holding your dog, where everybody in the the ElysianNxt is wild about it. What's the name again?
Flora. I was asked to make sure she got a mention on this podcast. I didn't even need to say anything to you.
No, that's good. I mean, it's always good to have some local flavor in an implementation. It makes it different from the other big bang implementations.
And she was there from start to finish. She was at the day one pitch and possibly even the closing meal, or mid-implementation meal, one of the
closing meal in the Chinese.
Yaocha again, indeed.
She definitely wasn't there.
Well, we are probably overlooking the cleverest aspect of your whole approach in sales, which was the sympathy baggage theft. By having, after the first, there's a non-flippant aspect to that. Probably, we became aware of Elysian somewhat tangentially through a neighbour of mine, Darren, and it turned out, wait a minute, this actually, if it's as you say it is, this could be a very interesting product. So a meeting with Matthias was duly scheduled. He came across and, seriously different from a lot of other big vendors, said, well, actually I have here, I can demo not your data, but another anonymized client data. We were like, wow, that does indeed look interesting. So it became conceptually real in our minds, and we're thinking, oh goodness. And Charles is thinking, actually, let's go talk some more with Matthias. And we're standing not far from our office. It's a warm sort of autumn evening, enjoying a beer.
Like today.
Yeah, reflecting on dining plans. And we turn back, the bag is gone. Matthias has to go to the police station. So instantly there's a pathos is in the air, sympathy, you could almost say. And so, we're left balancing that. It did look quite a good product, and he's lost his documents and had a real inconvenience. Yeah, we better go ahead and buy that product.
We should play that trick again.
Yeah.
How much sympathy you get? Yeah.
To be honest, Jim, I never believed this was only after one drink.
And that's the weird thing about it. It was literally during our first, maybe second round, was just on the way, because I think somebody was going inside to collect something.
And to further show Matthias' charming naivete about how orderly the UK was, he duly went off to Savile Row Police Station to report the crime, and expecting Sherlock Holmes to emerge, and got told, "Why are you wasting police time?" So he met modern Britain that day. Yeah,
but in the end, I could use that to claim back from insurance. So
excellent.
All in all,
all ends well.
All ends well. No, maybe going back to the implementation, I think one of the crucial factors I found, Chris, was also that, as a vendor, of course, you go in with a team, but the fact that we got access to yourselves, Charles, quite a lot of your time. I would say that's a massive success factor as well, to be so close to somebody that's been going through it all. And also the fact that you were open to innovation, because it was not, as you described, Jim, it was not just an off-the-shelf, hey, come on guys, plug and play. There are some very specifics about the products you have. And the fact that we're all open-minded about, okay, how are we going to approach X, Y, Z? I think that definitely helped in the whole implementation.
Yeah, well, aside from obviously the sympathy bag theft, we did get the impression, you said to us, look, this has to work for us. We're a growing company. It can't not work. Our first implementation in the UK. And, you sat there and sincerely said to us, we will make sure it's done when it's done. And that is, to be fair, that is what you delivered. There were many meandering paths along the way, technically around the spec of the product, data extraction. Charles had to do a lot of work with our data and engineer colleagues to try and get it in the right format. Your guys had to do a lot of work to interpret it, but you did persevere. So that, that is hugely valuable. We got that impression, and that is what you delivered.
Yeah. Not just persevering. I think Jai and Nida were both integral in evaluating the data quality, because if you're trying to review your own work, you're always going to miss something. So that was super helpful from my perspective. And then also building the things that they found through their checking into the titanium.
Data quality engine and the data.txt.
This is all part of our approach that, when we find things which are not standard in the product, that we will develop it within the product, not develop it on site, because otherwise you have something site specific, which would prevent you from easily upgrading to the next version. And you ensure that whatever we build, it has to be, we have to give the quality insurance that it runs properly and performs properly. Yeah. Now, has ElysianNxt or IFRS 9.nxt, has that makes your life easier?
It was a big investment to get to making it easy. Mostly, I'd say because of the data modeling issues on our side, but the fee charging mechanism being so unconventional and not being linked to the drawdown, that required a lot of data modeling work. And also, I guess, we were going back 18 months worth of data. So in a growing scale-up business, there's going to be data quality issues doing that exercise. Now that we're here, month-end process much easier. Obviously all intuitive within the UI, rather than hoping your Excel model doesn't break again this month. And then our accounting policies to sort of recalibrate the ECL assumptions twice a year. Inevitably, we end up doing it all in Q3, Q4 because we've got delayed by auditors, but now it's much less of a daunting task with all the historic data stored in one place, all of the monthly data, keeping that fresh and up to date. And it's just a case of rerunning the existing models on your chosen data set or refining the existing models. So it's easy to get a pack out to review. It's easy to extract the numbers to compare. This is our base case. This is where we're looking to move to. And it's easy to accommodate feedback just because you can go back to the UI instead of back to square one, like I said earlier.
Do you foresee in using the tool also not just for, regulatory purposes, but of course more for
for business management?
What if scenarios?
Task number one is taking it just out of the head of Charles, because what we're needing to do is broaden the number of people who can actually properly utilize it. For audit and reporting, it's Charles essentially, and that's not just being kind to Charles, with that level of accounting and data knowledge, that really is just Charles at present. We'll hire a IFRS 9 analyst or whatever we call to duplicate that knowledge, replicate that knowledge. But more broadly, we have other analytical focused colleagues we're saying, look, there's a lot in here in terms of how we look at pricing decisions, how we look at asset allocation. There's a lot of powerful analytics that we haven't yet scratched the surface on. It has been, for better or for worse, it's been an audit driven process. Probably the decision to go ahead last year was an audit related, management letter point that we had to address. And although we're talking about how we deliver data, how you delivered the product, that it was something of a menage a trois with Deloitte in the corner because, they had to be happy as well as us, or else implementation hadn't really happened. So at every stage it was, well, that's good. How do they feel about it? And at multiple stages, we should say. So that's that introduces a lot of time and complication, but also a bit of external validation to quality of the output.
Yeah, and that's probably what I'm most excited for now. We've got some reprieve from the annual audit, and hopefully more bandwidth coming on as well. Is
how do we utilize
the commercial use of it? One thing we didn't talk about with the previous Excel-based approach is the level of precision in the forecast is absolutely minimal. All the analysis is done portfolio level. If you wanted to split by product, of which we've got, I guess, 6 product groups, underwriting tends to look at them segmented by new versus renewing customers, so it most aligns with the risk profiles. If we wanted to do that, we're doing the Excel model 12 times, say. That's not feasible. No. Whereas now that's a segment that lives within the Elysian system. The ECLs are calculated and calibrated from data based on that segmentation. So we can be delivering much better forecast credit losses back into the business, which is now living in our data lakehouse, which has kind of been built up over the last year. And Elysian was actually by coincidence rather than design, was almost a testing ground for some of that our head of data was saying, building pipelines and pushing stuff back to the lakehouse. So it's been nice to be at the forefront of that internally within the business as well.
That's good to hear. That's not only adding added value for being compliant, but also adding value back to the business for the whole data management purposes. Would you give any advice for maybe viewers who were in the same situation as you were, Charles, and who were doing IFRS 9 on an Excel basis? Because, I mean, the good thing is, well, that's what I heard from Nida and Jai, is that you're very technically as well.
Yeah.
And write your own scripts and do a lot of stuff within Excel. And often I see this as a disadvantage because these people try to protect, their kind of baby. They've spent a lot of time. You must have thought about, okay, forget it. We need to get out of this kind of burden if we want to continue growing.
Yeah. Is that something you see a lot of people going from an Excel-based model into?
Certainly when they're going through growth.
Yeah.
At a certain point in time, okay, Excel, you can't manage it anymore. Certainly not when you want to defend, or if I said big word, defend to your auditors why the ECL has gone up or down back to transactional level. There's certain limitation that beyond a certain number of transactions it becomes impossible.
Yeah, Excel is one example. I mean, that's of course for organizations that start with that, but we also still see a lot of institutions that have certain pieces of code, and you could almost see that like just proprietary built code by one or two persons, and that just still live in a lot of financial institutions. But okay, when these people leave or it's not well documented, it's code, it's not readable for functional profiles. The governance is not there on this code. The audit trail, try changing it for one thing. So this is something we do see. Even IRB models are just sometimes residing in a large Python script. And that's where we do see that, we then say, have a look at a more common approach on how to host some of these models or techniques. And
maybe the advice is do the right thing for yourself and the business. That was just one part of just one part of my job, and it was contaminating everything. And if I leave, there's not even one Excel model, just different, slightly related ones. Dotted
around this,
So kind of a big operational risk for Creditspring.
Definitely. We shouldn't obviously amplify that. Single point of failure. I mean, in terms of it, they are daunting projects to take on because you're committing a meaningful amount of money and time, and you don't really have the opportunity to. Well, you can just sort of shut it down, but you've probably got, if it was an auditor or external stakeholder that drove you there, you've got to come up with something else. So you want to be sure, as I'm saying again, you're willing to demo the software to us, and you'd be surprised at the number of people who are not willing to do that until you commit. Lack of confidence or just a belief of, that in inertia that there's a certain number of volume of clients behind it, that should be enough. There's also another confidence factor for us, just as a small, medium-sized business, is the demo team going to be the delivery team, because we trust and we believe and we see the knowledge of this team of people. But if we get handed over to some other people we haven't met, and that we've seen that on other projects, so that's the demo team being the delivery team, I think, is very important. That's powerful, and I think you should continue to have that as part of your offering.
I mean, it's also a point that we work with, a fixed implementation cost, that we share the kind of risk of implementation. We say, no, if we put, not a strong team on site, then
that comes back on you.
Exactly.
Fixed fee delivery.
Exactly.
Absolutely.
So we're challenging different sectors, but in a similar fashion.
Absolutely. It speaks to confidence that you can get it done and will get it done. Obviously, you could say, well, that's your X £1,000 of delivery fee. That's me. I'm done. I'm pulling. We're going back to base. But you would very quickly have unsatisfied customers out there, whereas at present you're having customers who would say, yes, this was an onerous and challenging process, but where you did what you said you'd do, which is hugely valuable.
That's a great summary. Do you think it's time for a fine Belgian beer?
Perhaps.
Couldn't say no.
When in Rome.
So thanks, Jim, Charles, to share, the journey that you've been through in selecting our products for the IFRS 9 journey. Not only making you, I would say not more compliant, but also, with all the added value that you deliver back to the business. Thank you, Mac, for hosting us in the beautiful city.
Thanks, Chris. Always welcome, Yeah.
So, viewers, thanks for your attention. If you want to find out more information, please go to www.ElysianNxt.com. Thanks for your attention.